Hello and welcome to the latest edition of China Inc. by Bamboo Works, where we discuss the latest business and financial news from China and what it all means. I'm Doug Young, Bamboo Works Editor-in-Chief. Today I'm joined by a new guest, Juliet Ye, who's the PR and IR Director at Cango, a former car trader that shifted gears lately and moved into the Bitcoin mining business. Now, such a big transformation has been quite a complex process, including an overhaul of the company's management to bring in some seasoned cryptocurrency experts, as well as making some major operational adjustments. Since announcing the shift last November, Cango's purchased mining equipment spread across 4 continents with 50 exahashes per second of capacity. That makes it one of the world's top crypto miners. But change is still happening at Cango, including the announcement of its first post-transformation acquisition earlier this month. So today we'll take a closer look at that acquisition involving a 50-megawatt mining facility in the U.S. state of Georgia. We're also going to look at Cango's latest financial report for the second quarter and your relationship with Bitmain, the world's largest maker of crypto mining equipment. Let's start with the big picture here and explain to our listeners, why has Cango shifted gears and purchased a facility instead of using rented space?
Yeah, sure. Thank you, Doc, for having me. So great to be part of the show. I think it's a great show. So to start with, I think it's a very good question to start with, actually. So renting is actually a quite crucial part in our asset-light strategy. Given our scale, we now are running 50 exahash of computing power, right? So given our scale, the possibility of working together with industry experts to hit the ground and running is very important for us. It means that we can start very quickly without much of a waiting time or recruitment burdens, right? Mm-hmm. So that's why renting is actually a quite crucial part in our asset-light strategy. But now, owning a site like the Georgia site is actually more for long-term and energy stability. Mm-hmm. So owning a site means that we can have access to lower power cost so as to enhance our energy and also operational stability. Mm-hmm. So basically, we think it's a mix of things, not necessarily saying that we are only do renting or we are only do hosting. So another very important factor to note here is that owning a site means that it can become a training ground for us to build on our expertise in running energy and compute infrastructure so as to pave the way for our HPC pivot in the future.
Okay. All right. Well, so, I mean, it's got a lot of elements going here. Can you talk about sort of the future? You sort of hinted at this. Is this just the beginning of a bigger purchasing spree? And if Cango plans to make more purchases, how much will it spend, and what's its ideal ratio between cell phone capacity and rented capacity?
Wow. Well, though I love shopping, but let's not call it a spree here because in terms of like a site acquisition will be very selective, meaning that when making the acquisition decision, we'll definitely consider factors including low power cost and grid stability and also optionality for HPC. So these are all very important factors to consider, which means that we will only acquire a site if the site can significantly lower the power costs and also enhance our energy or operational stability. So you're talking about the ratio between renting and owning, right? So we do not actually have a specific target for that. In BTC mining, we will stick to the asset-light model or asset-light strategy, meaning that we will rely on renting for rapid scaling, like what we did in the past, and also for geographic diversity. But in the meantime, we're selectively acquiring sites to seek like energy stability and also potential for future transformation. Yeah.
Right. This transformation, I think, is an interesting thing. Well, we'll get to that in a minute. Can you talk about, you're saying you're going to look for specific things in the sites. Can you talk about this specific site in Georgia and specifically what drew Cango to this particular site? And, what are some of the qualities that it has or other qualities that Cango will look for in some of its future sites?
Yep, sure. So basically, we believe the Georgia site actually stood out for 3 major reasons. First of all, of course, is the low and stable power that's the most important thing for Bitcoin mining, because we all know in the cash cost to mine BTC, the electricity cost is take the big chunk of that. So low and stable power is the most important thing. Secondly, we look at the scalability and also grid resilience. So currently, for the Georgia site, it's 50 megawatt. Can not only serve our current mining needs, but also it provides the possibility for a future HPC retrofits. That's quite important for us. And also, we're talking about grid stability. That means that we can make sure the uptime for the fleet is great, meaning that we can mine as many BTC as possible. That's also a very important factor for us. And third reason here, it's definitely the US, strategic US footprint. Because you know that now among the 50 exahash of computing power, actually around like 57% is located in the US. Right. So owning a site here can definitely strengthen our operation in this market, and it also aligns with the preferable US policies, right? So talking about future purchases, and definitely they should have similar traits, say low power cost and climate resilience, right? And then definitely policy is supportive, and potentially like the Georgia site, existing partnerships. So we can ensure a smooth integration. So in talking about market, I think US will be our priority market because of the strategic importance, right? But we are also looking at potential opportunities in the Middle East market. Yeah.
In the Middle East. Okay.
Yeah.
All right. So then let's get on to the sort of the mixed use nature of these sites. Cango said that it's going to use 30 megawatts of the Georgia site for its own mining, and then the other 20 megawatts will go to renting out to other miners. Do you see this sort of as a future business model? And again, in percentage terms, what kind of revenue is Cango hoping to get from this business of renting out space to other miners rather than your own mining?
Yeah, that's a fair question. But agreed that the current arrangement is like 30 for self-use and then 20 for renting. But actually renting out the 20 megawatt capacity is actually more for flexibility rather than for revenue. So currently our priority here would definitely be focusing on optimizing our own mining fleet, right? So that means in the future, if our self-operated needs grow, we will tend to convert some of those rented space for our self-use, and that's possible. And then we don't actually target a specific ratio between, say, renting and also probably self-use. And then for us, because we believe the revenue actually from renting out the space is incremental cash flow. It's not necessarily a core piece of the income stream, something like that, right? So in the long run, as we shift gradually to AI HPC, we believe excess capacity will be more likely to be repurposed for AI workloads rather than renting out for crypto mining. Yeah.
Oh, okay. So the rental thing is sort of just to give you flexibility rather than...
Yeah, it's just for the sake of like making some money in the process. Yeah.
Get a little extra cash on the side there.
Yeah.
All right. Well, let's move on to the second topic, which I find quite interesting as well, which takes us away a little bit from Bitcoin mining specifically. And, when you announced this purchase, you talked about how this facility is going to establish a foundation for, quote, a more advanced energy strategy in the future. Okay. And in particular, you mentioned how Cango's laying the groundwork for a gradual pivot towards supplying energy for high-performance computing applications, or HPC. Can you elaborate a little more on that, including, what kind of revenue contribution we might hope to see from this part of the business?
Yep, absolutely. So we are very happy to have the chance to kind of like elaborate on the strategic roadmap we actually have here. So basically talking about Cango's evolution into a Energy plus HPC platform, we believe the evolution will be unfolded in 3 phases. So in the near term, we will definitely focusing on unlocking the full value of our 50 exahash of computing power through efficiency upgrades. Say, we will look to increase the uptime of our mining fleet to above like 90%. Currently in the August production report, the uptime for our mining fleet is around like 87, we don't think it's great enough. We will work on improving the uptime of the machines to up to 90%. That's one thing we'll do. And also in the meantime, we will selectively acquire low-cost sites like the Georgia site. So that's for the short term. So in the medium term, we will start pilot renewable energy storage projects aiming to achieve, say, near zero cost mining for some sites. And in the meantime, we'll try to retrofit some of our sites for HPC workloads. That's what we'll do. So in this phase, basically, we are laying the foundation for dynamic resource allocation kind of thing. So in the long run, we aim to build actually a dynamic computing platform that can intelligently allocate power between BTC mining and also AI workloads. So by doing that, we are actually expanding our revenue stream. So currently, we're basically relying on BTC mining as our only like a revenue stream. But by doing that in the long term, we can expand that to a more integrated revenue model that we can collect the revenue from BTC mining rewards, like what we've been doing in the past, right? And then we can receive like HPC or AI workload fees or colocation fees. And also because we also own energy projects, so we can definitely do energy trading. We can get revenue from that. We believe that business model is more actually synergetic and more resilient as compared to the current single kind of reliance on the BTC mining. So in terms of revenue, we definitely understand that in the initial period, the HPC projects will be pilot projects. We believe the revenue contribution will be actually modest or limited in the initial period. But as we gradually making the shift to HPC, as these like pilot projects expand or grow, and then we actually believe that HPC is well positioned to be one of the key pillar of the business in the future. So that's actually basically the three phase that is to be unfolded.
Just quick an extra question here then in terms of the AI future. This is just to clarify for listeners, the AI is third-party clients. That would be rented to AI clients. You wouldn't be doing AI yourself, would you?
Nope. We'll be focusing pretty much on the infrastructure side.
Right.
So currently we see all the re-rating of stocks in the market in the last few weeks, right? So whoever has a AI element or HPC element will get a re-rate of the stocks. We are doing that. We're definitely moving that direction. So basically, we can see that there are different directions for them to move to the AI or HPC side. For some of them, they're doing colocation, meaning they're providing, say, infrastructure to AI clients. For others, they're doing like GPU as a service, meaning that the AI client to just come in and use the GPU offered by the sites. So for us, we'll be focusing more on the infrastructure side. That's why we see the kind of like a synergy between BTC mining and AI infrastructure, because all of these are magnificent, huge, like compute infrastructure, right? That's the similarity they share. That's why we are focusing more on the infrastructure side.
Right. All right. Well, that takes me to just this whole business about the balance between infrastructure and mining. I mean, in your latest results, or Cango's latest results, which were for the second quarter, it was very obvious that the cost for mining each Bitcoin kept going higher, because just more people are entering the sector, and that caused Cango's revenue to fall about 10% in the second quarter compared to the first. At the same time, the company completed its installation of 18 new exahashes per second of capacity, adding to its existing capacity of 32 exahashes, which now is going to boost the output for the next year with all this new capacity. So given this constantly rising costs of mining new Bitcoin, you can keep installing new capacity, but costs are going to keep rising. What kind of balance does the company want to achieve between the mining business, which seems like costs are just going to keep going up, and then this newer HPC, high performance computing center business?
Yeah, I think it's a fair question to ask, right? We see the cost to mine is actually constantly growing quarter after quarter. I think it's the kind of like growing in the global hash rate network, and also the difficulty level is actually irresistible, I think for every single miner in this market. But we actually have our plans, as we just discussed in the last question. So basically, Cango it's to achieve a phased balance between our BTC mining and HPC operations over the time. I think it's closely combined with the threefold kind of like a strategic roadmap. So in the short term, we're focusing on optimizing our 50x hash of computing power by efficiency upgrades, and also we are replicating the kind of low cost Georgia model to reduce our per Bitcoin price, per Bitcoin cost. Right, that's what we're going to be doing. But in this initial period, because HPC will still be pilot projects, so we do not actually expect a huge kind of like a revenue contribution from that part. Right. But moving on to the medium term, as we just talked, and then we will start piloting like renewable energy projects to achieve near zero mining cost for some sites. And also we will start retrofitting or repurposing some sites for HPC workloads. So this period is actually quite important for us to lay the foundation, lay the groundwork for a dynamic resource allocation and also revenue stream. Right. So in the long run, definitely we will be working on building a dynamic computing platform, and then which can intellectually kind of like allocating power between BTC mining and AI workloads. So by doing that, we can definitely achieve like revenue streams from various areas, including AI services, energy trading, and also BTC mining. Ultimately, we will definitely strategically transform to a HPC service provider as our pilots mature, and also more importantly, as the financial models actually validate its path. Right, that's quite important for us. So we want to do things step by step. So till then, we can actually transform or evolve from a pure play BTC miner, as what we are in the current stage, to integrated computing and AI service provider or energy service provider in the future. That's what we were doing. So we call it a phased kind of like balance between the two different like business lines. So
do you see a time when all your business would be in the AI sort of data center, power center hosting, and you wouldn't do Bitcoin mining anymore?
I think I want to correct something here, is that we will do Bitcoin mining. So because it's the foundation business for us, right? So basically we always see Bitcoin mining as a foundation for this kind of energy or compute infrastructure, because you can actually use excess power when there's too much power to be used, to be consumed, right? Electricity to be consumed. But in the meantime, if we actually own the energy projects, say wind farm or solar plants, and then those electricity is actually cheap, right? If there is excess power, and then we can just put our machines there, and then they can mine BTC, and we don't care how many they mine, but just zero cost, zero marginal cost. So that's actually something quite important for us. So we will gradually kind of like transforming or pivoting to AI HPC service provider. But in the meantime, we will make sure our baseline, the mining business, is profitable. So that's a quite important thing for us. We won't say we will abandon our BTC mining business as a whole. Yeah.
Okay. So just a quick follow. You are just starting to look at the AI business, the hosting AI.
Yep.
Are you actually talking to any clients yet?
We are actually we are in active like discussions with various potential clients or partners, both in the US and also in the Middle East and Australia, to explore possibilities to work together with them. But at the current stage, no specific names can be disclosed. But I think we can have more clarity in Q1 next year. So I will definitely tell you by then.
Oh, all right. So we've got something to look forward to in Q1.
Yes.
We'll be hearing the names of some clients there.
Yeah, staying with us for more good news.
Okay. All right. Oh, then the last thing I wanted to touch on is sort of this, I don't know if you want to call it relationship, but the company Bitmain.
I know what you're talking about.
With the world's biggest supplier of Bitcoin mining machines, and there's been a bit of chatter and speculation, is Cango
Yeah.
somehow related to these guys?
Hmm.
Um, obviously you're related because you buy their machines because they're the
Yeah.
world's biggest Bitcoin miner.
It's
Or
a
sorry,
small industry.
right,
It's a small
right.
industry.
Well, that's really a supplier,
Yeah.
relationship. Um, is there, and then there have been a few relationships
Hmm.
between like some of
Hmm.
your former people, or
Hmm.
there's different stuff there. I mean, is there any actual ownership crossover, direct or indirect, between these two companies? And if the answer is no, would Cango consider becoming a more strategic partner with Bitmain?
Hmm. So first of all, let me answer your question directly. Take it as an official statement. There
Hmm.
is no direct or indirect, shareholding relationship between Cango or Bitmain. So
Hmm.
actually, as you just mentioned, it's a small industry, right? BTC
Hmm.
mining is actually a small industry, and then they are the producer of the mining machines, and which takes like over 80% of the whole global market. And then we are one of the top miners here, and we are purchasing mining machines from them. So that's definitely the relationship. So back in November, we acquired 32 exahash of secondhand mining machines from
Right.
Bitmain, and we paid
Right.
back cash. And then
Right.
that's how we actually made the entrance into
That's how you
this
started,
industry.
right?
That's one thing. And then the
Hmm.
secondly, we are relying on them to provide on-site operation and maintenance service
Oh,
for
okay. So
us.
they
So
are
Cango
helping
is
you to
actually
manage.
now Bitmain's biggest colocation client. So
Oh,
these
okay.
are the two kind of a relationship between Cango and Bitmain, and all this information is actually properly disclosed in public documents.
Oh,
So
okay.
I believe, and then whoever who is interested in this and can search our website or reach out, and then we can provide whatever information needed or documentation needed to clarify on that. So the
Okay.
answer is no, but
Mm.
we are always open. We are always open for partnership. So
Right.
we would definitely, we won't say no, right? As long as the partnership actually, I think, aligns with our strategic goal, right? But any
Mm-hmm.
times, but anyways, investor addition, any investor addition should be evaluated based on whether it can serve or it's in line with our long-term strategic goal, rather than just a short-term kind of like capital raising needs.
Right.
So that's basically our criteria here. Yeah.
Okay. Well, then just one quick follow up on Bitmain, because one area your relationship is mostly client supplier,
Yep.
but
Yeah.
one place where you two are both actually doing in the same business is operating these crypto mining facilities. Obviously, you're just doing the one in Georgia now, but you have
Yeah.
bigger aspirations for that. I mean, is this an area where you could consider, actually co-investing or working together to jointly open, or run these mining centers, or future HPC centers?
Yeah, I think why not? So actually flexibility is the key here, right? Flexibility is the key here. So currently we rely on Bitmain for on-site support. Maintenance and operation of the machines, but also we have an in-house. We actually retain an in-house operational team to do the remote oversight to ensure control. So in terms of like co-development, I think we are open for any possibilities as long as it provides clear synergies. Say, working together can provide us like easier access to global energy network or to HPC expertise, and then why not? And because we are a public company, we're doing business that align all the rules, right? But however, if for some sites the solo development can make sure that we can secure exclusive low electricity power contracts, or where solo development can definitely serve better our strategic transformation, then we will definitely pursue solo development. So basically, I think it's still balance. So balance is quite important.
Right.
It's a balance just between speed and also strategic control, right?
Right. Are any of the projects, you said you're looking at some other projects after the Georgia one, or are those all solely owned, or are any of
Yep.
those
Yep.
co-owned? So right now you're really just looking at solely.
Yeah, because we think at this stage we definitely need to get out some demos to show the market that we we have the capability to do that because we are like doing research on all the companies, and we know that the market will only re-rate the company if they provide concrete information, or say it's a client contract, say it's a gigawatt or megawatt project, or it's a financing in place. So we understand that. So currently we'll be focusing on getting out our demo projects and run the financials and to make sure that by Q1 we have something good news to share.
Okay. All right. Well, sounds like we got a lot to look forward to in Q1.
Yes.
Okay. Yes. All right. Well, that's my questions. I think you've told us a lot. Thanks everybody for listening this week. If you like what you hear, please tell your friends about us and rate us and share us on your favorite podcast app. And don't forget to join us again next week for another edition of China Inc. And we'll look once more at the latest trending Chinese business topics. Hope to see everybody then. Goodbye for now.
Thank you, Doug. Goodbye.